The stock market is absolutely melting down. GPUs over at OpenAI, due to people sharing memes, are also melting down. We've got Apple over in China trying to maintain some market share over there. We've got a ton of news as it relates to Nvidia and what the future looks like for the world's largest semiconductor company. We've got investors wondering what they should do in these moments. We've got investors panicking in these moments. And the 1% is going to separate themselves more and more from the 99% over the next weeks and months ahead. As you have uncertainty, you have panic, you have people that don't understand what is going on. That is why you as an investor need to maintain a level head, continue to inform yourself. I've got some crazy news this week that is going to inform you and make your decision makings as it relates to investing very simple over the next weeks and months ahead. We'll get into all of that. We'll also look at all of these stocks technically. Despite all the ups and downs in all of these stocks, technically, they're pulling back to very reasonable levels. We'll discuss all of that on today's show. What is going on, investors? Hopefully you guys are doing well out there. Let's kick things off like we always do with Meta Platforms. Start of the week, it's 617. This one drifting lower by about 6.5%. Sounds hefty because we finished the week at 577 and it has some investors panicking. But when you look at the stock technically, there's nothing to be concerned about. Now, what you should be concerned about is what you're doing next Tuesday, April 2nd, over on the Equity Empire channel. We are going to have a live stream, 5:30 Pacific time, 8:30 on the East Coast. We will be going live on the Equity Empire channel to talk about Liberation Day, tariffs, the impact these have on markets. We'll talk about AI, semiconductors, all of the questions that you have. You'll be able to ask questions in the chat. We'll have a fun time on April 2nd. Make sure you're subscribed to the channel so you tune in on the 2nd. Now, companies are frantically trying to shore up the race to become a superpower when we move into a deeper era of AI. Meta trying to acquire a company called Ferocia AI. They wanted an $800 million offer, but that was rejected by the Korean AI chip startup as they plan to continue to raise money, but eventually go public. Moving on to Apple. Start of the week at $220, down about 1.15%. Finished the week at $217.89. Tim Cook, boy, he's been spending a lot of time in China, so you can tell the pressure is on inside of that country. Pressure is on Apple just to maintain market share, let alone spur some growth. He was in the DeepSeek hometown, and he later praised DeepSeek as being an excellent AI model. Now, I've talked about this over on the Equity Empire channel as it relates to China, and it just blows over 99% of people's heads. A lot of you guys, first of all, not necessarily old enough to remember like China like maybe over the past couple of years, let alone China in the 90s, China in the early 2000s. The fact that you have one of the premier software makers in the world, one of the premier software makers of all time, praising software that is coming out of China, that was homegrown in the country of China, is absolutely extraordinary. The fact that China is not just making toys that are sold at Walmart, not just a manufacturing economy. Now they're manufacturing world-class software that catches the attention of world-class American software makers. This is a gigantic shift. Now, some of you, again, the 99% think, oh, well, I must have to go buy a bunch of Chinese stocks and I must have to short Apple and Microsoft. I mean, that is how the 99% literally think about this. No, what that does mean, though, is that we are moving into a new world where China doesn't just make rakes and shovels and widgets that come out of a factory. They literally can compete in the world environment as it relates to software. That doesn't necessarily mean American software companies are screwed. It also doesn't mean that China is all of a sudden going to dominate the software world. All it means is this country is now at the stage where they're making extraordinary software. And it probably means that we're in for one of the greatest eras of software that we've ever seen as humans. Now, part of China's strategy as it relates to Apple, they are bringing on a game called Withering Waves that's coming to Macintosh computers. So again, the company's like doing everything that they possibly can to maintain market share there in the country of China. And Jeffries is anticipating that shipments of the iPhone should fall double-digit percentages during the first quarter, and those declines should go through 2025. I think I've read several estimates on this. There's nobody saying that these shipments will turn around. Who this is bullish for is probably, if we're going to pinpoint maybe a single American company, it's probably bullish for a Qualcomm, as they're making a lot of the chips that go into the China domestic things. Now, what happens to Qualcomm stock? I don't know. I just know they'll probably sell a heck of a lot of chips because Apple's selling less phones in the country of China. Now, company is remaking their executive staff as well, as they've turned to a new global retail store operations. This is a complete reshuffle over at Apple. You can tell there is a little bit of panic over at Apple as it relates to their Chinese sales, as it relates to their software, as it relates to potentially the Google search engine deal going away. There is panic over at Apple. And that's probably a good thing if the company can rebound and that the company can respond to the challenges. But this is a pivotal next couple of years for the giant. They're planning to add cameras to their smartwatches to power additional AI features. These are on the Apple Watches. I didn't know that the darn thing didn't have a camera already. Seems like a feature that should already be on the watch. Company sets June 9th for its Worldwide Developer Conference. You'll recall that last year, Apple had the Worldwide Developer Conference. They announced a lot of AI features that many of them or some of them have rolled out to the phone, but some of them, like the more advanced version of Siri, that actually hasn't made it over to the phone yet. And so we'll see what they decide to focus on this year. Obviously, last year it was more AI. The year before that, I believe it was the Vision Pro goggles. So 2 years in a row, you've had the Worldwide Developer Conference by Apple, and it's basically talked about two things that have kind of flopped for the company. So we'll see what they decide to focus on this year. That'll come into focus as we move closer to June. Moving on to Amazon. Start of the week at 201, drifted down by about 4.3%. Finished the week closer to $192 per share. MGM Studio, which is a movie-making TV kind of production business, also has a huge content library of shows that was bought by Amazon a few years ago. Probably a pretty good purchase by Amazon, actually. Really bolstered up a lot of the content that you see on Amazon Prime Video. Well, the head of MGM Studios is stepping down. I don't think that's any big surprise. What was interesting is they're not replacing this person. And we're also seeing over at Amazon is a flattening of the management structure. So you saw like a AWS head, they left the company. So these are like, I don't think these people are deciding to leave. I think you're seeing people forced out over at Amazon. They're getting rid of kind of that upper to middle management layer in the company, and I think ultimately that's probably a good thing. Now, they're expected to expand Amazon Prime Day to a 4-day shopping event. I think in the past it's been closer to maybe 1 to 2 days. It's expanded to 3 days. This is the Prime Day that happens in July, so the company just trying to stir up even more interest in Prime Day. They continue to cut support staff over at Amazon. Some people might read into this and think, well, demand must be slow over at Amazon. But many believe that this has to do with artificial intelligence. The fact that you have these chatbots that are able to answer kind of regular customer service questions that in the past might have had to come to a call center, had to come to like an email support center. Now you've got AI handling a lot of that type of thing. And so we're certainly seeing this, we're getting into the era of AI where it actually starts to do something. So we've seen over the past year or two, tech companies, all of these tech companies haven't had to hire a bunch of engineers. In fact, they've laid off a tremendous amount of them over the past couple of years. In fact, I wouldn't even recommend anybody learning to write code. I would learn and recommend you to learn how to read code, but you don't actually have to learn how to write code anymore. If you know how to read it and understand and interpret it, you're going to be able to get the AI to do that. We're moving that direction as it relates to customer service. We're moving that direction as it relates to a lot of different functions inside of the knowledge ecosphere. And this is just one example of that. Moving on to Netflix, start of the week at 957, the streaming giant not immune to the declines that we saw across the stock market, down about 2.5% this week on virtually no news. Moving on to Nvidia. Speaking of moving, shares of Nvidia started the week at 120, down 9%, 90%, basically straight down on the week to finish the week much closer to $109 per share. One subsidiary of Nvidia, which I believe they have a 5% stake in CoreWeave, which is a data center provider that specializes in renting Nvidia GPUs, they went IPO, showing you that the IPO, this got to be like one of the worst days of all time to go public. I mean, the fact this company had to go public in this market probably shows you some of the financial concerns that this company has. The fact that they probably didn't have access to any other type of capital. The fact that they decided to go IPO in a terrible market, particularly as it relates to anything AI and anything technology. The bankers were able to hold the IPO price, although you kind of drifted above and below the IPO price. They're going to try to hold this $40 for as long as they possibly can. CoreWeave will take some of this money and then go reinvest it back into more Nvidia GPUs, so probably bullish from that sense. Now, the Trump administration has got a big decision on their hand that relates to a lot of different uncertainties, and that's really contributing to a lot of what we're seeing in the stock market. Is you've got a lot of uncertainty as it relates to tariffs. That's why we're doing our April 2nd live stream. There might be a little bit more certainty as we move into that day. You also have this day coming up as it relates to May 15th. This is where you have some major decisions as it relates to semiconductor rules that were first put in place in the President Biden era and that look to strengthen some of those in what they call the AI diffusion rule. Basically, what you are going to have is countries divided up among 3 different tiers. You're going to have tier 1 countries like most of North America, Europe, Australia, and Japan. These are going to they're going to be able to buy as many Nvidia GPUs as they possibly can, or any other high-end processor out there from AMD, Broadcom, or etc. You're going to be able to buy any amount of those. You're going to be treated like a first-class citizen as it relates to GPUs. Then there's going to be tier 2 countries. This will be most of South America. It'll be parts of Africa, the Middle East, Southeast Asia. For some reason, some of these countries are going to be put in a tier 2 chip access where they'll have some restrictions on how many they can buy or even which versions they can buy. And then finally, you have tier 3 nations, which basically will have a complete embargo on them, not allowing access to the highest end chips and potentially not even access to any of the chips at all. Those countries include China and Russia. Nvidia, among other companies, are trying to get the Trump administration to loosen these rules, because what is going to happen is China is just going to continue to move down its own path to develop this technology themselves. Now, will they be able to catch up with Nvidia over the next 365 days? Probably not, but just like software, just like anything else that China has done, you look at the EV market there. Many of you don't believe me. Many of you haven't done 30 minutes of internet research on the Chinese EV market and realize that the EVs coming out of China are better and cheaper than anything they make anywhere else in the world. That's not a slight against Tesla. It's not a slight against any other automobile maker. It's just simply a fact. That is why the governments of these Western countries had to put 100% plus tariffs on the EVs coming out of China, because they are better than anything else. So what do you think is going to happen to chips, to software, to anything else if you restrict China? They are not this dumb nation that can only make 99-cent toys that get sold in Walmart. This is a very capable nation, and what they are not capable of doing, they will copy, steal, and backdoor any EUV machines that they need from ASML. They'll figure out a way to catch up with Nvidia as it relates to this technology. And that is why Nvidia is asking Washington to rethink these types of rules, because either China is going to end up with the technology by copy stealing and mimicking it themselves, or you can just give it to them as it relates to Nvidia. Obviously, from a business standpoint, Nvidia would like to sell into the country. Now, interesting, the company is in talks to acquire something called Lepton AI, which is basically like a CoreWeave type company that has data centers, and then they rent access to Nvidia's GPUs. Be interesting to see if GPUs, or if it'd be interesting to see if Nvidia goes further down this road to create recurring revenue and create its own, more of its wholly owned data centers and continue to generate revenue going forward rather than just selling the chips to others. During GTC, Jensen Huang said that the company is going to move into co-packaged optics, particularly silicon photonics. Tell you what, if you want to make a bunch of money over the next probably 2 to 3 years in semiconductors, I would do maybe 30 to 60 minutes of internet research on silicon photonics. Many of these companies are getting absolutely hammered over the past 3 or 4 days. These stocks are going to get crushed, and then everybody's going to realize that the silicon photonics technology is going to make its way onto every Nvidia GPU, and then the shares will skyrocket. So some great opportunities emerging in the co-packaged optics space. This is also how China catches up with Nvidia, is that you move into new technology, new ways to move the data through the silicon and through the computer chip, and silicon photonics, probably one of the most exciting aspects of that we've seen in many, many years. More news coming out of China is you have Jack Ma, legendary Jack Ma, saying that his group called Ant Group, they touted, I think, about 20% cost reductions using Chinese AI chips. These headlines are just going to keep coming every month for the next probably 12 months, 24 months. You're just going to have rapid advancements in China as it relates to either modifying Nvidia GPUs, creating their own, those types of things. Anybody that thinks these restrictions put on the country are going to put China at a significant disadvantage as it relates to AI are completely out of touch with what's actually happening there. These sanctions are more like a speed bump. If anything, China will absolutely have a leading position as it relates to semiconductor design and the software that comes from that. And that is a huge shift from where we've been over the past decade, 2 decades, really since the beginning of time. Now, there's this big discussion, is if DeepSeek and China keep finding these types of efficiencies, will there continue to be data center demand? Do we need to sell off our Nvidia shares? I got probably 40 questions this week as it relates to Nvidia. I'll answer that question here in a moment when we get to Microsoft and OpenAI. If you were selling your Nvidia stock, if you're selling based on the fact that China has some advancements here, you are a 99% investor, and you really, really, really need help probably in a lot of different ways. Now, moving on to Google. Start of the week at 166. Google getting hammered this week, down 7.3% to finish the week at 154. What did Google do to the stock market? Well, they announced a new Gemini 2.5 AI model. I got to play around with it a little bit. Certainly good. I think Google needs to consolidate their AI models. They've got like 5 of them, and it's kind of more like computer science nerdy type stuff. They need to just consolidate this all the way down into one text box, one use case, give the turbo nerds something to use on the side, but the average people don't know the difference between 2.5 and experimental and all these types of things. Just shrink it down to one model, but Google continued to show advancements here. Now, Waymo, self-driving unit that is wholly owned or mostly owned by Google. I think rumors are that it's maybe 60-70% owned by Google. They are targeting Washington, D.C. robo-taxi debut in 2026. Now, I discussed this along with Tesla on last week's show. A couple of comments that I've gotten. Some of you guys are really worried about Tesla, or you're wondering why I'm all of a sudden talking about Waymo. Here's the thing that you need to understand about content and financial content, particularly here on YouTube. People post content here on YouTube for the algorithm. People post content here on YouTube telling the algorithm and what will get clicks and what will get views. Very few people in the finance space are actually telling you stuff here on YouTube stuff that will actually make you money, actually be a good decision for you. So as it relates to Waymo, a lot of the content that you'll see is, oh, Waymo's going to destroy Tesla, or Tesla's going to destroy Waymo, or this, that, and the other. A lot of you guys look at the world in exactly how politicians want you to look at it. If it's good for Republicans, it's bad for Democrats. Or if it's good for the Los Angeles Lakers, it's bad for the Boston Celtics. In the stock market, guys, it doesn't work that way. Just because Waymo is picking up some steam means absolutely nothing for Tesla. In fact, it's probably good for Tesla. It's good for Tesla. More and more robo-taxis actually make it out on the road, because the more and more robo-taxis that make it out on the road, the one thing that is holding back more and more robo-taxis being on the road is not the technology. It's not the ability to make this. It's not even customer demand. The one thing that is holding it back is the politicians that you guys vote for. They're the ones holding this stuff back. So the more these technologies can get out into the public and more people can realize the benefits of it, it actually paves an easier path for Tesla to get out there. And I'm telling you, the self-driving market is big enough for both Waymo, Tesla, Amazon. Those are going to likely be the three companies that benefit the most. This is not going to be a winner takes all or a winner takes most moment. This is where you are going to have a trio of companies that capture a significant amount of the market share and have significant advantages over anybody else. And that will come apparent as we move forward. Moving on to Microsoft, started the week at $393. This one drifted lower by about 3.8%, but this is the biggest headline of the week. Forget what Donald Trump is doing. Forget what Elon Musk is tweeting about or talking about. None of that stuff matters. In fact, a year from now, you will not be able to put your finger on something that Trump said or did this week. That is because he will have said and put his finger on something completely different a year from now. The same is true for Elon Musk. But what we saw this week is a sign and a preview of what's to come in the AI market. You had OpenAI release images, and this is almost like the fact when images got introduced to the World Wide Web, when you got Netscape Navigator, and instead of viewing a text-based website, now you could view images, and it blew up the internet. Literally, you had to go get a brand new modem, and you had to do different stuff. You had to go get a brand new computer in order to do that. We are seeing the exact same thing happen in AI. And I understand not a lot of you guys are like old men like me. You don't remember this type of stuff. But this is the era that we're on, is that AI releases like literally something very, very simple. OpenAI releasing a new image generation that allows you basically to upload a photo of yourself or a meme, and it creates just a copy of it in a meme-like style. The usage of that was so high. We're talking about memes here, folks. We're not even talking about doing something actually useful or interesting. We're talking about memes. Memes literally melted. One of the biggest clusters and one of the biggest and most expensive GPU clusters in the world. People posting memes literally crashed OpenAI to the fact that they have to limit you. You can't post as many memes as you want to over at OpenAI. Guys, this is literally inning 1 or 2 in terms of the amount of compute that is going to be required, because I've said it many times here on the channel. Very, very, very soon, probably in the next couple of years, you're going to stop consuming a lot of media that the media just puts at you. They produce a movie like Snow White and then you go and watch it. No, you are actually going to produce your own version of your own movie. You're going to be able to tell the AI, I like listening to Pearl Jam. I like Brad Pitt. I like Sydney Sweeney. I want that all in a movie set in Japan, and I want this, that, and the other to happen. And you're going to press enter, and then a full feature movie is going to be created based on your likes, just like a meme is done. Just like you're interacting with these AIs. It's moving from text-based 2 years ago. OpenAI was simply just text-based, very much like the internet in 1995. It was strictly text-based. Then it moved to static images. Then it starts to move to slightly less static images, maybe short form video, and then it moves to longer form and full featured video. That's the progression we're on. And if right now static images freezes up and melts the largest GPU cluster known to an AI company, well, the amount of compute that is needed to reach the AI levels that we're going to get to, then we are miles away. We are talking miles away. We can't even see down the road. It is so far away. It's like on the other side of the country how much compute power is going to be needed. So it really literally doesn't matter what China does. It literally doesn't matter if Nvidia makes a GPU or AMD or Intel or Broadcom or whoever. Literally all of it is going to be needed. If memes are shutting down the GPU cluster over at OpenAI, we have so much demand for compute. You and I could probably make some GPUs and they will be used over the next couple of years. I understand with tariffs and all this other stuff happening in the world, this stuff can create volatility in the marketplace. If you're 65 years old, you probably have to be a little concerned and you might want to step out of the way of this. If you're a commentator on CNBC, you are trying to attract people. You're trying to appear smart. You're trying to manage other people's money. You're supposed to be able to forecast all this stuff and forecast the moves that the market makes on a daily basis. You don't have to be a CNBC commentator. You're not a hedge fund guy. You're not a money manager. What you have to do is start to look forward 5, 6, 7, 10 years from now and realize that people are going to be making their own videos. They're going to be making their own music. They're going to be making and doing all the things with AI. And if AI can't handle just making static picture memes right now, guess how much compute power is required and needed? It's probably a number closer to infinity rather than any other number. Now, OpenAI continues to secure tons of investment because of this, including $40 billion from SoftBank. OpenAI continues to forecast their revenue to more than triple in 2025. So again, everybody's going to be saying AI's in a bubble or AI's doing this. Meanwhile, memes are shutting down OpenAI and they're expecting their revenue to triple. I tell you what, the more the stock market sells off, the happier I get, because I know in 3 to 4 and 5 years, I probably won't even have to do these videos anymore because I'll have so much money from all these investments that if I want to sit back and relax and do nothing every day, that's probably going to be able to happen. Now, AI infrastructure stocks fall as Microsoft scraps some data center plans. See, us as humans, this is what happened this week. Humans saw this headline, and this is what they attached to. Without any knowledge about how Microsoft really plans their different data center plans, understands that they're constantly going back and forth with plans, also understanding the fact that OpenAI is using SoftBank, they're using Oracle, they're using CoreWeave. They're using other companies instead of relying strictly on Microsoft's data centers. And so investors saw this and they assumed that, oh, there must not be any demand for AI, even though literally the demand is hitting you right in the face if you know where to look. Moving on to Tesla. Start of the week at 262. Up and down week for Tesla, but basically finished flat. There is some backlash and some planned protest for Tesla starting on March 29th. People plan to attend Tesla showrooms worldwide, including many here in the United States, protesting God knows what. I don't really know what they're actually protesting here, other than the fact that they're being told to protest. How this will impact Tesla and its brand, I'm not exactly sure. People do not buy Teslas at showrooms. You actually buy them online. So I don't think it'll really necessarily disrupt that. What I would say is if you are going to protest, please, Lord, do it peacefully, because they are handing out really strict and stiff sentences for this type of stuff. I've seen people get a couple, you're keying a Tesla and you're facing 5 years in prison. Guys, it's not worth it. And so we'll see what happens here. But you had auto tariffs this week, but slapped on basically all automakers, and it's a stiff 25% tariff on any vehicle not made in the United States. That benefits companies that do make their cars here in the United States, including Tesla, Rivian, and Lucid. Now, You had a massive European sales decline. Some of it thinks it's Elon Musk related. Some people think that the revamped Model Y, which is the top selling vehicle, not only in the world for all automakers, but also for Tesla, obviously, as well. That model was being revamped. The old model was being phased out. The new model was being launched, and I think mainly at a much higher price point until they launched kind of the quote normal model. That probably disrupted sales a little bit. There's probably a little bit of political backlash as well. But what I would say is that I know that these protests and Elon Musk and people in a political mindset, they see this stuff and they think it's a big deal. But if you go talk to like a normal person on the street that doesn't really pay attention to politics, this stuff actually doesn't matter to a lot of people. This only matters to like hyper political people, which I understand is a decent segment of the population and is probably not a great thing for Tesla, but in the long run, I don't think this is going to be that big of a deal. They plan to launch in Saudi Arabia next month. This is after the quote funding secured tweet that Tesla or Elon Musk put out. I think this was all the way back in 2018. I think he said something like, you know, he was going to take Tesla private at $420 a share. The funding was secured. It's just one of the long list of things that Elon Musk said and didn't end up being truthful. For some of you, that makes you incredibly, for whatever reason, butthurt. But for the rest of us that actually have a life, we barely even remember it. In Canada, they are playing politics as it relates to Tesla, as they are rolling back rebate payments and they're moving to block future incentives over at the country. And so, you know, look, I guess you can go buy one of these gas-powered vehicles. And, you know, climate change, what happened to climate change, guys? I guess that goes out the window when the electric vehicle is made by a Republican. Now, moving over to the technical segment of the show. First thing you want to do is when everybody's panicking and they're tripping out, you do a zoom out on the chart. And, you know, not a lot has been happening. We finally have pulled back to the middle of the channel. This is why you look at the charts. You don't have to understand technical analysis and spinning dojis. I literally get a comment every week on one of my channels about people saying, I don't like technical analysis. I don't like your technical analysis. And it's like, you don't look at price? If you're going to go shopping for a car, you don't look at price. If you're going to go buy a house, you don't look at price. That's all this is. This is not something fancy. This is not Miss Cleo in a crystal ball. We're just looking at price here. Price is pulled back to a more interesting level. Price continues to pull back. It gets interesting, but this also gives you a lot of comfort because you're like, okay, here's the trend that the S&P 500 has been on since October of 2022, and it's still in that trend. So despite all the stuff that's happening in the world, the stock market is still on trend. It's fine. Okay, same thing with Meta. Pulled back to the middle of the channel. That was your chance to start buying and kind of begin your buying opportunity. Here we are at the bottom of the channel. These bottom of the channels can be very interesting. If you do break below the bottom of the channel, again, it's not time to panic. You have all-time highs back here in 2021, down here in the $400 range. I understand some of you can't stomach a stock going from 550 down to 400, but that's the 99% mindset. The 1% mindset says, well, I guess I'll step in here and I'll buy some more. Apple also pulling back just to the middle of the channel. This trend has been intact since 2020. There's nothing in this trend and nothing that's happened over the past couple of weeks that is absolutely at all alarming with Apple. Amazon is pulling back to what I call a green box buying area. It's the previous consolidation that the stock went on from 2020 into 2022. Then you had Jeff Bezos' wife really actually create a lot of selling pressure on the stock, along with the broader stock market, really pushed shares much lower, below trend more or less. I think you've got a great buying opportunity with Amazon. Netflix also continues to be on trend here. You've been intact since 2022 on this one. It continues. Nvidia, slightly different position than some of these stocks, but you are going to retest this area down here at about $103. This is the area everybody is looking for. You get a break lower with Nvidia, creates absolutely some amazing buying opportunities from just fundamental perspective. It is absolutely amazing This company's products are going to stay in high demand for the next decade. Pullbacks in that one should be continuing to be purchased. Google, big move this week. The purple line is the longer term trend. So just to understand, with Google, you are actually still relatively well above the long-term trend on this one. So just keep that in mind. Continues to pull back. You continue to buy. You're not going to catch the bottom. Understand on these things. So many people worry about catching the bottom, or I don't want to step in too early. No. Just pick out a level and buy. It doesn't matter. The only people worried about timing this thing perfectly is what I find is people with like $100 in a Robinhood account. I literally have people emailing me worried about like buying 0.5 shares of Google. Stop worrying. Just buy it on the way down. Eventually the market will resolve itself and shares will continue to move higher. Microsoft is retesting a pretty long-term trend here. This one has been in a buying box for the past several weeks. And look, if you do break trend here, you have support down here at about 340 on this one. Nothing to be overly concerned about. Tesla has basically gone nowhere for the past 5 years. And I say nowhere. It's gone as low as 100 and as high as 500. So in between going nowhere, you have like a 400-point swing. But you are like kind of in the middle of that consolidation. I mean, you've basically been going sideways on the stock. You are in the middle of the consolidation. This is nothing to be concerned about. You are not at the bottom and you're not at the top. You're literally at the middle. And I believe that purple trend line, which I have there with Tesla, that's the long-term trend. So you're actually still over trend on this one. Stocks were overdue for a pullback from the market and industry perspective, but then also from each individual stock perspective. These were all due for a pullback. And in fact, they're probably still due for a further pullback. And oftentimes stocks move irrationally to the upside. They also move irrationally to the downside. That's why when these corrections come, they are incredibly exciting because a lot of investors panic. A lot of investors are at the position in their life where they are 65, 70 years old. They can't buy the dip. Or you're a CNBC commentator and you get paid to look smart, so you have to wait until there's some sign of life. If you're a 1% investor and you're watching this channel, you're probably my age or around my age. You don't have to worry about any of that. You step in and buy the dips. You're not going to get them at the bottoms. Incrementally buy these things, continue to dollar cost average, and at some point these things will reverse and you'll thank me later. Hopefully you guys enjoyed today's video. We'll be back again soon. Make sure you go and subscribe to the Equity Empire channel. I would love to see you guys in the chat on April 2nd. This would be 5:30 Pacific time, 8:30 Eastern time. Until then, good luck with your investments.